Good morning or afternoon, potentially, depending on where you're at in the world. Welcome to Market Check, brought to you by Because Bitcoin. I'm Snorlax. You guys also know me as Tommy. I'm joined by Tucker, Max, and Jackus. Welcome, guys. I hope everybody had a phenomenal weekend, both on the panel as well as the viewers. Thank you guys for tuning in and being here early. Of course, we had a bit of a gap down in equities today. As the market is processing the new conflict within the Middle East. The VIX is up. Volatility is higher. I saw that the dollar was higher, although not materially that much higher than it has been. But I guess the question is this a catalyst? And I hate to use the word catalyst, as you guys know, but will this move the markets? And I don't know that on its own that it's enough to move markets, but perhaps it, down the road snowballs into something greater. I'm not going to speculate on any of that, just what we see with the charts, right? That's what this show is about. So as far as what else we see in the market, we also saw a bit of a down move in Bitcoin, right? Not substantially lower. I mean, roughly 1.5%, which for Bitcoin is, these days a decent bit of intraday volatility. But the real move was in altcoins and ETH, right? Which, ETH dropped about 2.5%. Some of these altcoins that I'm seeing on my watch list are down 4, 5, 6%. As far as majors go, I'm sure that, some higher beta might be down even more than that, but it is reflective of a Bitcoin dominated market. That is still the case. Will that result in a move higher on Bitcoin, or will it result in a massive altcoin capitulation? I think that has been, what this panel has been debating over the last few weeks. And I do think a lot of clarity is probably, of course, going to come from the equity market. And unfortunately, I would say that I'm expecting probably mostly sideways price action from Legacy this week, maybe a slight float higher even. I would say that the conflict that caused the VIX to rise in the beginning of the week and just volatility in general is kind of the perfect excuse for them to crush volatility into the middle of the week, into the late week. And then we can kind of go from there, right? So I don't know that I'm expecting too much volatility this week, but I do think we're getting very, very close to probably what will be maybe the best period of volatility that we've had all year. And I think that's true in either direction. But let's get into it, guys. I hope everybody had a great weekend. Jackus was at Pilsner Fest. I know, Tucker and Max were feuding over some football. But yeah, no, it seems like everybody had a great time all around. What are we seeing in the markets, guys?
Yeah, hey guys. I did have a great weekend. Spent some time with my wife and kid. It was nice outside yesterday. That was great. Just kind of chopping the markets this weekend. I mean, crypto is moving a little bit. Obviously moved late last night. While us here in the US were asleep. But yeah, I mean, I think I'm not surprised by what I've seen play out. I mean, of course, the news breaking out of the Middle East it's devastating. It's heartbreaking. I can't help but feel for anybody that's affected by it. And I'm not surprised by the market's knee-jerk reaction down. I mean, to see gold gap up, to see oil gap up. I think DXY initially was up a little bit, and U.S. equity futures were down. It's not surprising at all. I mentioned this morning in our Discord. One thing just to consider is the knee-jerk reaction to things like this happening, at least from just a market perspective. Nothing geopolitically, nothing, no anecdotal personal opinions about what's going on, just how the markets have reacted. My only experience trading during a war or the breakout of a war was recently. I remember I was in some Bitcoin and Ethereum shorts when the first bomb hit Ukraine. And I remember going to bed thinking like I was going to wake up just like completely loaded. I was like, this market's going to completely nuke. The knee-jerk reaction was so aggressive. I put my stops at break even, and I was so excited to wake up. And I wake up and I'm basically trailed out at break even, And I was like, what the hell, man? Like the market V recovered, a war starting. What the hell? And that's my only experience trading something like this. So I say that just to, just to preface, look, I mean, you have to be a little bit careful here. This was a pretty sharp sell-off, at least in crypto. And I'm not even talking about altcoins, right? Altcoins can bleed and go to zero for all I care. Okay, this is not that. I'm talking about Bitcoin. All right, I'm talking about Bitcoin. And the question is, on a Monday, from potentially, well, not even potentially, a war in the Middle East breaking out, do you want to pile in short here after a Sunday night to Monday morning drop? After what happened last time, when Russia bombed Ukraine and we recovered off of that, I'm not so sure. I'm not so sure. I'd like to take the short here. And my gut's telling me that we're probably going to float back up and see Bitcoin back above 28K by the middle of this week. But we'll get into the TA a little bit later. I also think that equities can probably recover nicely from here. I don't think that this should like nuke the U.S. markets too badly. I wouldn't expect a whole lot today, either up or down. I think we're just going to let the market kind of get its skis underneath it. But yeah, I'm not expecting like an immediate nuke or something like that in the market from this news. But I guess time will tell. Structure definitely looks a little heavy on the S&P. NASDAQ doesn't look too bad, but I'll leave it there. But yeah, looking forward to the discussion as always, guys.
Yeah, but Max.
Hey, good morning, Will.
Good morning, Will.
You eating a burrito, Will?
All right, can you guys hear me okay?
Okay. I thought, I couldn't hear you. You said something and then you didn't finish your sentence. I didn't know what happened.
I stopped because I was like on the car phone, and I know it sounds like I'm talking to a CB. But no, I wanted to bring up. So I want to kind of bring up, or at least, and not entertain in the way of like what's going on is entertaining, but entertain the scenario. And this is the way I see it personally, and maybe people see it differently. Is like what is going on over there is more of like an internal groundwork than it is an actual war, right? And I think that those two things are subsequently different. While markets may react in the short term, I don't think it becomes a long-term catalyst for markets because of that specific reason, right? The reason wars are typically looked at as bad is because they go on for long periods of time, whereas internal conflicts tend to resolve themselves within a short to medium term of time. Not saying that the conflict that's been going on over there has ever been resolved, but basically they're two kind of different scenarios. And I'm not going to sit up here and LARP like a lot of people are on Twitter, like I'm some kind of geopolitical, expert all of a sudden, after trading crypto and stocks. But I'm more looking at it like just kind of what's been going on and what kind of tactics are being used and so on and so forth, if that makes sense. So I think like bidding the long end, like if you're looking at this and you're like, oh, I can go bid war stocks, I don't think that works out in your favor. Does that make sense?
We can look at some more stocks later, potentially.
Yeah, I just wanted to bring this up quickly. This was an encapsulation of Max and I's weekend right here. Don't come at the champ, bro.
Well, you know what's going to happen though, man. Kelsey's got a high ankle sprain. He's going to miss the next 2 games. All right.
Kelsey's fine, man.
They shot him up. They shot him up, and they gave him some painkillers in the locker room.
Yeah, okay. They said get back out there.
He's going to wake up with a gallon water bottle on his leg. Okay, connected to his foot. He's not playing for the next 2 games. So
you know who I'd be worried about is JJ. I'd be worried about Justin.
Are you really bragging about beating the 1-4 Vikings? I mean, come on.
That's the first time Mahomes ever played the Vikings, actually.
Really?
Ever. Now he's clean swept the whole 32 team league. Finally.
Hold on, the Vikings are still a team?
Yep.
Yeah. It's not pretty, Will. Yeah. It's not pretty, but yes.
Yeah.
Yeah, it's not good, man. It's never a good time to be a Vikings fan. Let's just put it that way.
Yeah. I don't know. With this move on Bitcoin though, I think as long as you hold the range as 27K, higher time frames, weekly and higher, you're still at a structural uptrend. I think you break below 27, you can easily roll a lot lower down in the 25s again. And I think you go back and revisit 25s. That's showing more of a weakness of support rather than a strength of support because you're continuing to retest the liquidity. And I think if you retest the liquidity, you're potentially going to break through it. You got a bear trend on the top end too. You kind of rejected in the same top end trend that you're seeing right there on the high time frame. It's just continuing to just follow that trend down. So you really didn't want to catch rejection there, but if we can get a breakout above that, we'll be good. We'll be bullish. But below
And
that,
guys, real quick, we need some more likes in this video. Guys, thank you so much for being here. Happy Monday, October 9th. We got 30 people watching right now. We got 12 likes on this video. Let's see if we can run this up to 20 likes on the video real quick. Thank you guys so much for your continued support of the Because Bitcoin brand and this show, Market Check, brought to you by Because Bitcoin. Please just take one quick moment and hit that thumbs up button for us. It does absolute wonders for the channel, and it really makes the algorithm or the robot at YouTube headquarters take a liking to us. Additionally, if you guys are new here, this is Market Check. We go live every single weekday, Monday through Friday at 10:40 a.m. Eastern Time. We are your daily show for all things markets and TA. We've been at this show maybe like 3.5 months now. It's been going very, very well. But if you guys are ready to take that next step with us, we would love if you guys actually subscribe to the channel. So maybe you've liked the video and you're like, you know what, I really like these guys. I've already given them a like on the video, but I'm ready to really take that next step with them. They've proven themselves to be a loyal cast, to be good traders. I love tuning in on a regular basis. I've liked the video, but I forgot that there's a button right by the like button. That's a subscribe button. So please consider actually subscribing as well. Thank you guys so much.
Well, the great part about that is, Max, is that button cost them $0.00, right? So
it's such a good thing, man. It's such a good thing. It's such a good
point. Supporting us for free is an amazing thing.
And if you want to hit a button that is not for free, check out the links in our bio. We have some not free buttons and links that you can click, which would give your money to us, and then we would provide you with additional market insights and commentary in a private setting. So if you feel like paying, there is an option to do that as well. But Will is correct. The subscribe button is free.
We do also offer memes if you guys want, part of that subscription model. So, yeah, we'll definitely try it out.
Ooh.
Tucker, why so bearish biased, man? What?
Look at this comment. Interesting stuff, man. Interesting stuff.
What are some good cybersecurity stocks? I have absolutely no idea.
You know what I'm gonna do? I'm just gonna come here and I'm gonna type cyber.
You're gonna get the cyber
cyber USDT. Is this what they're loading up on?
No.
So
bankers are buying your cyber.
That's disgusting. So something pretty noteworthy that I'd like Jackus to touch on is gold had a very nice reaction. Jackus is our in-house Because Bitcoin commodities expert, commodities bug. He's got a very interesting theory. Oh, we lost the doc. Oh, there he is. Okay, but gold had a very pronounced reaction to the events that took place this weekend. Jackus, if you're able to, man, I'd love to see some charts. Maybe hear your thoughts on it.
Yeah. Hey guys. Maybe you can. Yeah. You're pretty quick.
Look at that perfect reaction. Wow.
So first of all, I just arrived home after a Pilsner festival, as the guys were saying at the beginning. So I haven't caught up on all the war stuff and so on that has been apparently flowing around on Twitter the whole weekend. So I don't know much about that, but I'll simply look at the chart and some new data that I actually, was looking for and finding on Friday. And I do hope I remember them well. But first of all, I've read a good note from Zodiac. He said, as always, people will look for a narrative to why we dropped. It's 95% just a liquidity game. and that's a good one because lots of time we see the news, and I'm not saying like the war news has been I'm not saying that someone just built a war just to align that with some supports or so. But what we see a lot of the time is that news are being brought at the right levels. And we've been discussing this level prior, when we were in this falling wedge, and that's both for gold and silver. And we've been discussing on both that gold could drop to these levels. And I was specifically drawing, I wasn't drawing this as a support, this level. I was drawing this one. And we talked that if we drop from this falling wedge, that would actually be good because it would create lots of fear. And then from this demand zone, I could actually see us bouncing. And I'll get once again into the new findings why I think higher is next for gold. I want to quickly touch upon silver, which had that neat reaction, from that weekly demand we talked about as well. And if you look at that weekly wick right into it, that's just beautiful how respected it got. I do think we can bounce back once again into it. We can spend some time in here, but the level to watch is this weekly level, which would potentially turn into a breakout because we had some form of consolidation right inside of this weekly impulsive like higher that broken the structure. And then we form this sideways action. And this is the point of the breakdown, right? So reclaiming that point of the breakdown is very important for the price. And we have to keep in mind the broader structure of the overall chart. So very important, but it starts right down here. So these two things I wanted to point out as a great confluence. Then the next one, I want to talk about, and I'm actually gonna copy a chart here. One sec.
Just move across the room there, Jackus.
Sorry?
Did you just move across the room?
I have.
Will has cameras at your place, just so you know. Yeah,
Yeah, that's
he's watching you. Yeah,
that's pretty scary there.
I didn't mean to throw you off. I was just
No problem. I was just, I wasn't as prepared as I should have probably been. But I wanted to share this chart. I think that's pretty interesting. So this is a, from one check interview I was actually checking on Friday, and this shows a group of it shows group of large entities on the COMEX exchange, right? And it shows how positioned they are currently. They are called Raptors, and they are as largely positioned right now as they were during the bear market of 2022. And right now, but the difference is that we are trading about $2,000 higher. And what I loved about that is also that they are positioned on the futures market, right? And on the futures market, if you are positioned 1 year ahead, you have to pay around 4% fees on the interest. And the question is, why would you do that if you are thinking, or like, why would you do that if you can get basically a risk-free 5% bond? That means that you are basically anticipating a stronger price appreciation going into the future. And these are the largest entities, and they are expecting big upside. So 4% basically gets us, just the 4% mark basically gets us right above this breaker level. And I think, we're gonna have to new all-time highs, basically. After if that happens, I think another.
Go
Yeah,
ahead and finish
go on.
talking. You're good. You're good.
No, go
I was
ahead.
gonna feed off. Okay. So I wanted to kind of lead into what you were saying there. Is you're stating that they're positioning for a big move, and I would have to agree. And I think it was, and I'm going to give them kudos because this was not from me. This is something I read from Joe Carlos there, and it's a really good point that a lot of people don't take a look at. Right,
Carla, sorry.
Carlos, sorry, my apologies.
No. It's Carlacery, guys.
My
guys are
apologies if I butchered your name, Joe. I want to put respect on the man's name. The guy is great on macro data. But yes, everybody keeps on talking about different names when they talk about his last name. So I don't know which one it is. Okay, hey, Joe, if you clarify that for me, I would greatly appreciate.
You just should call him Uncle Joe. That's what Wabi calls him.
Yeah.
It's Uncle Joe.
But I want to make sure people go to the right guy. That's why I always give the last name. But yeah,
That's
so one thing I wanted to point out with him specifically is one thing he brought up that's a really, really good point is risk adjusted, right? So a lot of people don't consider risk adjusted, right? And what is risk adjusted? Risk adjusted is basically if assets are pushing up, what does that mean for the market? Well, that means the market is seeing more risk for not being in versus being in. Now, what do we consider a risk-free investment? Anybody? Does anybody know what a risk-free investment is?
Yes,
risk-free
you can't lose money.
What the market considers a risk-free, 100%
market considers risk-free the government bonds, basically.
Government bonds. You hit it on the head, Jackets. Yep, there you go. So they can so since the market considers your government bonds risk-free, how you get to a risk-free adjustment is you take your risk-free asset and you minus it to your current risk profile of your current asset. So if your current asset is at a risk profile of negative, we'll say 3, right, 3% or whatever, and you're risk-free, or well, never really, yeah, it could be, yeah. So because technically your risk-free is risk-free, right? You're 0. So if your 10 years at your 5%, you subtract your 5% to your current asset, right? So if you're at a 2% risk, your risk profile is really low, right? If you're at a 8% risk, your risk profile is very high. Now, these are just numbers I'm throwing out there. They're not necessarily 8 or 10, 8 or 2. Like you don't go and look for 8 or 2 from what I'm telling you. What I'm telling you is like when you compare two assets, if you were to compare, let's say Tesla, and you were to compare something like Rivian, your risk profile would probably be heavier with Rivian, right? Based on your expected return to expected losses on your percentage gain. So since your risk profile is heavier on Rivian than Tesla, in that case, you're essentially looking at these two assets. And you're like, okay, should I go into Rivian or should I go into Tesla? And basically what we're seeing a lot of people go into Rivian right now. We're seeing a lot of people taking risk in the market and not people, because I don't think retail has money at this point. I mean, I think they have money, but I don't think they have money, right? I think it's mostly institutions, mostly bigger players that are positioning right now. So if you see money moving into the market, it's not your next door neighbor or your post office guy. It's somebody who has a decent size amount of money and they're adjusting their risk profile based on risk adjusted, right? Now, granted, there will come a time where bonds will outweigh any type of risk, right? And I think we're getting there. I think we're just a ways out. And I think that, probably 5.5 or 6% on 10-year bonds is probably where that'll be. As insane as that sounds for a number, right? But we've historically been much higher than that. I just want to be clear. I think a lot of people don't consider that. When we first started out with bonds, roughly around 10%. So 6% isn't really a lot. We're seeing a lot of things kind of flip on their head, whereas the norm was 5%. The norm was 4.5% in some areas, but now we're seeing a lot of these bond rates exceed these norms. And because they're exceeding these norms, people are like, oh, these things got to snap. It's like, no, it's like actually we may have just flipped our entire thought process and the way that we look at these markets on their head. And now we can go higher than what we previously were able to based on where we are now. And so these bond percentages can go higher, even though a lot of people think they can't. And if bond percentages go higher, what does that mean for assets? that means in the short term to midterm, we could see assets continue to rise against the current bonds, right? And then eventually, though, it does go boom. And when it goes boom, bonds start to get bid and things start to break, because at a certain point, your risk adjusted is too high. And when your risk adjusted is too high, when you have a large amount of capital, you're going to end up buying into bonds for that 5.5 to 6% juicy yield. And anybody can say, well, nobody's going to buy. You're not going to buy that. You're retail. Whereas big money is going to buy that because they have a lot of freaking money.
Will said, you're not going to buy that. You're retail.
The chat.
I mean,
You're
me too.
retail.
I'm not going to buy it either. I'm just telling you, like, I'm not buying bonds. Like, I'll probably buy some, but I'm not going to buy a significant amount of bonds. Whereas big money is. That's what I'm stating. It's not me saying I'm not retail. It's me stating that your average Joe is not buying bonds. They're not. It's your bigger institutions, your bigger money players. They're going to look at risk adjusted and they're going to be like, hey, it's too much risk on the table. We're going to start buying bonds. But I think that comes later, though. That's kind of the point I wanted to kind of get to. With risk adjusted, it's a really good way to look at the economy as a whole and understand, okay, what is my current risk factor? Now, risk factors right now are high based on bond yields, right? They're very high. But the market is still thinking there's a bid. And that's why we're seeing money continue to flow, right? We would not see that money flow. We'd see that money flow go into bonds. And that's where you'd be like, okay, money flow is going into bonds. We're about to S the bet. One example I can give of that is the 10-year. So in 2008, we had two consolidation ranges. We had the higher and we had the lower. Currently, we're playing in the higher. The second we stepped down to that second consolidation range, everything was done. It was all cooked. So I think like there is a point in the 10-year where we can identify it and point it out and be like, okay, this is where we need to be watching, because if bond yields come down to this area, we're probably going to start getting cooked on the markets. But as you're stating, what I wanted to kind of get to is, as you're stating with gold and silver, that's where I could see the scenario where silver and gold could still run, like you're stating, because I think bonds still have room to move up, right? Whether people want to believe that or not. And another thing, too, I think that we don't entertain enough, and I'll be done cooking in just a second, is I would say specifically, we don't entertain the potential for basically the Fed to come in and taper their yields, right? Or not their yields, but their interest rate hikes, which means they come in next year, we maybe get down to 4 or 3. And then they come in the next year and we get down to 3 or 2. And then the next year we try and get it down or try and hold it, and then something breaks, right? It doesn't have to break on the high end of the percentage rate hike. It can break as the Fed is trying to step down the hikes. So I think a lot of people don't entertain that also. They think that cuts have to occur in all scenarios, and in all scenarios that leads to some kind of systemic bleed off. But in reality, we could be tapering down, while in reality, we're still moving into some type of systemic risk, even while tapering down, and something snaps on the way down versus on the way up. Or on the hold, right? So, like, I think a lot of people just don't entertain that is a potential. That is your soft landing. You're still going to get wrecked, right? It's just,
I was about to.
It's on the latter end. It's on the latter end, right?
Buy bonds to feel like an institution.
You got to understand the compound on like a 10-year and 5-year. Like, you're getting exponentials over the percentage that it actually is.
Well, today is interesting because we're seeing, obviously, USTs aren't being traded right now. Like, they're closed today, but obviously TLT and TMF are because they're ETFs. So what we're seeing, it's kind of interesting because they're trading solely based off expectations today, not actual bonds being traded or yields moving at all, right? So
not war either.
Just
expectations.
I know. All it is expectations today, which is like you don't get that pretty much ever. So
That's very interesting. I can't think of another time that's happened. But
you know what I mean?
I haven't
Yeah,
been
it's
trading
like
them for that long.
yeah. So
Yeah,
I guess
I
it
also-
probably happens every Columbus Day, but
you can go and finish there, Jackets.
But how often does a war break out in the Middle East? The weekend before Columbus Day.
Columbus Day.
Yeah, that's unique.
Okay, that one I'll give you. But how often does a war break out in the Middle East?
Will, I have
On
to
the
remember
regular.
this moment because you don't give me a lot of those. All right, you don't give them to me. So thank you for
the
giving
Columbus
it to me.
Day is the Columbus Day. All right. No, I admitted when I was wrong on direction. I definitely pointed it out all over and on Twitter and all that stuff.
I
I
know
said,
this is the
Max
second
was
time,
right.
man. This is the second time. This is a day to remember. Will gave me one.
Wait, I want to see what Jackus is chefing up right here. This is interesting. Jackus,
I
what
just
you got?
okay. So first of all, some good thoughts from Will, as always. And one thing that he mentioned is that he thinks that retail doesn't have money. So this is a chart that I pulled up directly from the Fed, and it shows the percentage savings of the U.S. folk, and it shows that we are basically at nearly historic lows, which are prior to 2008 financial crisis. I think so. As he was saying, the retail doesn't have money anymore to invest, and I do agree with that because with the latest news in the markets, retail has been pretty much wrecked. Even with the upside in equities we had, the truth is that most people have been infected with the idea that we are going to zero and the world is falling apart, that most people simply had no exposure or were actually short or had options, and so on. So maybe some, jumped in right at the top on the equities, but probably got scared again and sold. So even like from the investment idea is that the general folks are not doing good and don't have money. So this is something that Will was talking about, and I just wanted to confirm that with a chart that says that the personal savings rate are lower than they were prior to when COVID started, which is right here around, what was it, 7.5. Right now it's at 3.9. So that's nearly, minus 50% prior to COVID. Moving from that, back to the commodities, equities, ratios, and my whole intermarket thesis, which I think just has to make sense because it's all macro charts connected. It's like you cannot have them diverging for too long. I think this is pretty interesting chart. So the US cost of debt servicing set to explode, right? So this chart says how much percentages of the US government income has to be paid back on its debt. Like how much do you pay on interest to service your debt? And it's jumped over 20%. That means that 20% of the US government income just vanishes straight away just to service the debt. I also will put out a chart from the Fed on the interest payments, and I've been talking about this once again, but I'm trying to put it here together for the viewers to understand the big picture that, and connecting the charts and trying to draw the right conclusions from those. And this is the federal government interest payments, it's just basically the same chart shown in a different way. So you can see that the interest payments on those bonds are going parabolic, which obviously isn't sustainable. And this chart shows the same, just in terms of percentage of the income for the U.S. government. So what does that mean? That basically means, and I'll jump from the gold chart to the equities. That basically means that where the bond market. That basically means that the U.S. government cannot afford these high interest rates. They cannot offer these high bond prices or yield prices, if I'm saying it correctly. So what does that imply? That implies that the Fed will be probably forced sooner or later to come in and start buying those bonds and lower the yield prices. So once again, I just don't see a valid scenario rather than like, we are going up and everything's gonna go moon. I don't see much valid scenarios for yields to spike much higher. They can temporarily, but then they will quickly reprice, just like the Polish interest payments has. They've been tapped at 7%. They have shortly spiked higher, but now they are trading below the current U.S. interest rates, and I think that's the same for the U.S. yields. I just don't see them spiking, and I think that the Fed will try to bring that number down so that the U.S. government can function.
I agree for sure. And not just to cut in there, Jack, because I feel like we should entertain the bear thesis. Because I feel like a lot of bears like and I mean not in the factor that be bearish, more in the factor to kind of debunk the whole bearish thesis with when it comes to bond yields. Because a lot of time you hear, well, the Fed is unloading their balance sheet, right? Yeah, arguably they are. There's lots of ways they can unload that, though, outside of just going into bonds and unloading bonds. And this is why a lot of people are sitting there talking about, well, if the Fed's unloading their balance sheet, then that means they're selling off bonds, and that means bonds go higher. And the reality is it's a fine line. They have to balance that. So sometimes they buy, sometimes they sell. That's why you see bounces in the balance sheet. Who equals that out? Well, it's going to be other countries. What we're doing, I think, currently, in my own personal opinion, is we're pressuring other countries to have to buy our bonds, buy our debt through financial means, right? Just through arbitrage and so on and so forth to these other countries. And so even though the Fed may buy those down, that's where you'll see basically that, that buy up or that spike, as you can see. And then what they'll do is once other countries start to buy back in, they'll sell into that buying pressure to that other country. We're relieving our debt onto other countries, essentially. It's what we're doing. It's actually genius, but a lot of people don't even understand the process here, right? It's buy it to keep it steady, to keep it under a certain yield that makes the government non-functional, and then it's pressure other countries into a position where they have to buy our debt and then push into that buy momentum.
Yeah.
Right.
Yeah, exactly. That's a great point, Will. Sorry, I didn't want to cut you off. If you have anything more to add.
No, I just wanted to add that specifically because I think like this, a lot of people don't understand the process of how bonds work their way down or their way back up. Now, that does mean that bonds ultimately stay elevated. Why? Because there's a lot of debt to relieve, right? So if there's a lot of debt to relieve, then bonds stay elevated regardless of how much they buy and sell and push price around. When do yields actually come down? They actually come down when interest rates are lowered, because that's where they can basically come down to a level that's sustainable when it comes to yields. But they can remain elevated in a certain area for an extended period of time of the government just continuing to push our debt onto other countries, essentially. And then, yes, I want to touch on oil because like everybody's like, oil. It's like, dude, you guys are all oil seals, okay? You live in the ocean, you swim in the oil. I can tell you this, look, oil has been running for months. It has nothing to do with the war, right? It has just been running. This is an obvious inflation play. We have an easy to see resistance here. And if oil can't get through that resistance, good luck. But if oil breaks through that resistance, a lot of people are like, oh, inflation's coming back. It's against the Fed. So the Fed's not going to pressure anything. The Fed's going to let this play out. Oil can run. And if oil runs, inflation runs. And if inflation runs, guess what goes with inflation? Heavy, heavy risk. Right?
Yeah.
So you have to be careful with that one. You can't be playing on the wrong side of oil.
No, you cannot.
Treasuries today, guys.
What's up?
What do we think about treasuries today?
They're not trading today.
Oh shit! Stupid question.
But the
imagine,
ETFs
though,
are.
So something interesting is if
Max, what's going on with your background there, brother?
oh, that's
look at both their backgrounds in sequence.
that's a rocket ship, and that's the moon with a Bitcoin logo on it.
Is there a Bitcoin logo?
Yeah, yeah.
Yeah, there
I
is.
see
Look
it,
at
I
it.
see it,
Yep.
I see it,
It's a
I see
big
it.
B.
You know what it looks like, right? Because Tucker's on top of you, so it looks like your ship's flying up, and then the ship explodes on Tucker's screen.
What would cause a spaceship to explode going straight up?
It's happened.
Tucker?
I don't know.
I don't know, man. You never know.
Has happened technically.
It has indeed happened. Yeah.
I also think that a pretty decent argument for gold could be obviously it is from multiple reasons that we've already discussed, and I find that it's like a risk-free bet in a way. But I think another good argument there is that China is currently getting very, very cheap oil. That's a fact, from Russia, because Russia had to offload that oil to other countries, and obviously they want cheaper price. So what happens is that, and I understand that in the Western world we get propaganda as news, just like they get them on the other side of the planet. But the thing is that China will suddenly, if they are getting half the price of oil that they used to get, they'll have much cheaper production, and that will create a bigger part of savings, and these usually go to either US government bonds or they go to gold. And there is a good case that they'll start buying from the London exchange, all that gold that they will have from the reserves, from the cheaper oil. So I once again cannot see and I have so far not seen a valid argument against the bigger picture that I'm trying to paint here, guys. Against it, like I just don't understand how some people can be. First of all, it's hard for me to see people being bearish on gold and thinking we go like somehow lower realistically. And then if they are not bearish on gold, then it's a real question how they can be bearish on the other commodities and so on. So I have not yet seen a pretty much valid argument against that. And I think that people are rather ignoring it because they don't have the arguments against it. So they pretend like it doesn't exist. But,
I'd like to touch on your oil conversation again too, and I can give you another
No.
reason why oil will run specifically and has been running. It's because it goes back to exactly what you were stating: is China wants cheaper oil, but I can give you the real nuance behind that because they can negotiate cheaper oil. Why can they negotiate cheaper oil? Because nobody's trading with Russia, right? Only China and a few other countries are willing to do so. So guess what? Russia, if you want to offload that oil, we're willing to do it, even though you're under sanctions. But you're going to do it for significantly cheaper than what we normally pay for it. And what does that do to U.S. markets on oil? Well, guess what? Everybody who was buying from the U.S. is now buying from Russia for significantly cheaper. What the U.S. has essentially did is they've positioned Russia to, yes, have to sell their oil cheaper, but it's given them more expansion on being able to get more countries to buy their oil. That's all it's done essentially. I mean, Africa doesn't care about our sanctions. China doesn't care about our sanctions. And if you guys think Africa doesn't have money, I don't know what to tell you. Like, literally gold everywhere. And then you got tons of other countries that don't care about sanctions at all. I mean, you have some countries that are aligned with the Western world that will abide by sanctions, and you have countries that are basically skirting sanctions, like China and so on and so forth. And the U.S. is not doing anything to them to kind of get them to stop doing what they're doing. So guess what? They're going to do it. And what that's going to do is that's going to pressure U.S. markets on oil, and that's why U.S. oil has been pressured. Not to mention,
Yes.
let's take it a step further. Let's take it a step further. Our reserves are empty. Our reserves are empty. They have to fill those back up at least every once in a while. Add a little bit. And what that's going to do? That's going to keep oil floating. That's all it's going to do. Oil can't come down. It just can't. The government has created this inverse bra type market, right? Where the entire market is doing the exact opposite of what it should be doing at these levels because it's being pressured on both ends. And it's being pressured specifically for an explosion. It really is, and I state that in like the most non-moon boy way I can state it. Now, granted, an explosion into an implosion, in my opinion, but an explosion nonetheless.
Yeah, and it's exactly that US has currently problems getting oil. Actually, they've been selling really hard to keep the CPI down through the entirety of the last 2 years, and they keep on selling. But at some point, as Will pointed out, and we talked about this in the past, they will have to start refilling those. And like, if there is already so much pressure, just add this pressure on top of it, and it's just the whole broader picture lining up together again. And the US currently has problems getting oil, because and I mean, when you talked about Russia getting cheaper oil to China or the other countries, definitely. But when it's going to Europe, actually, it's actually going there much more expensive than it used to, because
they're offsetting with Europe because Europe needs them. So they're raising Europe's prices and lowering China's. So guess what? Their market's unaffected by sanctions, essentially.
Yeah, it's just that the Western world is paying way more for it actually, because the Russian oil still flows into Europe. It just flows through different countries. So you're paying all these intermediaries in there, or they are the sanctions. So like, in any way, it's just more expensive for the West to get the oil right now. And on top of that, you have the OPEC, which cut the production and so on. And it's painting in a chart. We talked about it earlier this year, that oil is going to go up. Then once again, everyone started to get overly bullish on oil, saying it's going to go above 100. We talked on the stream here that it's going to it could have, surely. But like, when the market keeps going down, usually it's not just going to be, straight up. You will get these pullbacks and so on in the middle. And I think it's the same thing for the Nasdaq, and we talked about
oil is very unforgiving to trade. From what
nat gas, don't touch nat gas either.
Whoa, Will.
Hey man, I'm touching nat gas.
Look, if you're playing it on seasonality, definitely a good play. But outside of that, you're going to get wrecked.
They don't call it the Widowmaker for nothing.
Mm-hmm.
Yeah, so I think that the gold is really preparing once again, and the whole commodity cycle is preparing for the decade of the commodities, and we will see a period of higher inflation, higher interest rates, and stagflation for the US, and everything is lining up here. Like the more evidence I'm seeing, the more it just lines up. And
So, Jackus, let me ask you a question. And I have to preface what I'm about to ask you with, I can't allow you to answer the question with, it doesn't matter on a day-to-day basis, because I think that that's invalid for this instance. Why is gold...
what you're gonna ask?
All right, I'm gonna ask it. You already know though. Why did Bitcoin sell off today when gold clearly rallied off of the conflicts that are arising in the Middle East? I would have expected Bitcoin to rally alongside of gold.
As I was saying, and you forbid me to answer that, but like, I started to follow this correlation when I was trying to put everything together around 2021-22. And what I've noticed is that these can diverge here and there. What we are looking for mainly are the macro moves, and sometimes they are very correlated even on the intraday basis, but sometimes they are not. And we do even see that between the commodities. Sometimes you're gonna have oil gunning, and you won't see the other commodities gunning as well with it. And to be honest, I wouldn't say that BTC like sure it's down on the day, but it hasn't really done anything. If anything, we see like like I would say that we have to take into account that silver is basically trading as if it's trading below 25Ks right now. So BTC in comparison to silver is basically in a what's it called, like it's much stronger than silver in that regard. And as I kept saying, there's still a small, I don't think it happens anymore, but there's still a small probability where we see a quick drop from BTC with a fake out like this one, where it touches on the EM correlation and does that fake out to the lower side as well, just like silver and gold has right now. But there is also a possibility where it doesn't do that and it just waits for silver and gold to reprice, and then BTC just keeps going up with it. Because what's also possible is that pretty much nearly all the risk or so is out of BTC, and it's just basically right now waiting for the right impulses. But like I just I lost my thought that I had previously there.
I have a thought on it. Unless you want to finish,
Get it done.
So let me entertain it with a question back, right? And that question back is: has BlackRock, Fidelity, Grayscale, so on and so forth, put their BTC ETFs on hold?
No. The
Okay,
government's
so-
put them on hold. They haven't.
The government has. They haven't. So if they haven't put their ETFs on hold, how concerned are they about global matters and downside?
No,
I mean, from just
No.
looking at it. No, I'm just asking. Look.
I don't think that's
Look, I'm genuinely just asking, right? You may think I'm trying to frame something.
Tucker,
but I'm
answer
just
that.
asking.
You got
so
that.
you're saying that because they haven't withdrawn their ETF approvals that they're not bearish on a macro time frame?
No, I'm not stating it at all. I'm stating more on the side of looking at crypto as a whole, and I'm sure they are. Do I think that, or do you think that a lot of this even matters to them?
Well, yeah.
Do you think they would have came out with the ETFs at the time they did if they thought macro mattered right now?
Well, yeah, just because they haven't lost faith in crypto as an asset class doesn't mean that that's bullish, right? Like that would be it's like the risk there is solely skewed to the downside. Them keeping their ETF approvals open is neutral, and them withdrawing them because they lost faith in crypto is extremely bearish. Like the only bullish piece is if it actually gets approved.
No, I'm not necessarily talking on the approval side, because that can definitely be questioned, right? That could take a year, it could take 2 years, it could take 3, it could take 6 months. We don't know the approval. That's why I never entertain the approval. I just entertain the thought of what were they thinking when they did what they did, right? And I can tell you this, like the way I look at it specifically, I try not to allow it to affect my trading too much because it makes me very bullish. But I look at it specifically like all these bigger players are trying and fighting to get it, essentially, right? And everybody on the timelines, all you do, like if you say anything about outside of the 500 people that still exist in crypto to anybody else, they'll tell you it's a scam, right? They'll tell you why you in it. It's a scam. I'm glad you're losing money, yada, 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 right? And these are the comments you'll get back in response. And so when I look at Bitcoin, at least on a long-term scale, I think what's going on is going to change the game when it comes to the space, right? From a liquidity standpoint, maybe even from a cycle standpoint. We'll see at the end of the day. I'm not going to get baited into that. I'm definitely selling when I get bigger near the top. But at the end of the day, these are things that I think that we should entertain with crypto. And in those cases, because I think these things, I think like Bitcoin and so on and so forth, yes, high risk beta, but it's going to trade with markets. And if markets aren't getting absolutely obliterated, then I don't think Bitcoin's going to be obliterated either. That's kind of my thought process behind it, at least the way I look at it. And that's why I wanted to throw it out there and see what your guys' thoughts were, right? And yes, I agree. If they were to withdraw their ETS, I would probably sell. I'm not gonna lie. I would, and I would sell for lower, right? Because I would expect prices are going to drop in a big way if that were to happen.
But they're not going to withdraw their ETF applications, man. They're never going to do that. Like,
they're not retail. They're not going to go and wishy-washy a position. They made a decision. They're going to stick by it.
I mean, let's get back to the basics, guys. Because I think the spot ETF is getting approved sooner or later. Like, there is just too much demand from too much people, and I think it's been widely accepted in the financial community that BTC is here to stay. That it has a logical argument to stay here and serve, whatever. Like, different people look at it differently, but pretty much all agrees it's here to stay. So I think the spot ETF is like done thing. Now there is the manipulation part around it. We need to wait until we are filled. We know how that goes in the world. So they will apply it sooner or later, and the question is, how do you play that? And I think just go back to the basics. Look at where we are trading right now, compared to the all-time high. We are still so fucking cheap. Like, generally anything, in my opinion, anything below 23% retracement level is just like, it's a steal. And so if you want to forget everything else, just look at this metric, in my opinion. Then look at the time spent here. Look at the time we spent here since the June, about nearly 500 days. That's another good argument, in my opinion. And I still am possible to give to the bears, like, that we can have a price manipulation below here. That's something I've been calling about and being prepared for. Until we reclaim 30K, then this scenario is still possible, especially now that silver and gold is trading below. But what's the argument for BTC trading at 10K or going to new cycle lows? It's just, in my opinion, it's just wishful thinking. I'm literally looking for a valid argument for that to happening, and I just don't see anyone.
I can give you an argument, but I don't believe it. Okay, but let me give you the argument.
Give me.
All right. This entire
Binance,
year.
Sorry, Max. One more. Binance imploding would
no, that's not what I was going to say. That's not what I was going to say. But okay. that would potentially take us down there, but I'm not going to say that.
And I agreed on that to the bears, but I forget to mention except this one, of course.
Okay. I think we get clarity on the Binance situation this month. By the way, I wanted to say that I think there are some things that kind of favor it.
Is it? Why do you think this month, Tommy? Is it just a pure feeling, or is it you heard something, or is it based on astrology?
A lot of it is astrology, yes. But a lot of it is astrology, yes.
Yeah, I mean, I'm not laughing, because it could totally be true. Let's not laugh at new techniques to look at the markets. We'll see how that works.
No, I don't think anybody is laughing at the astrology part. It's just, I think a lot of people expected it.
Some people
astrology, right?
Okay.
It's not a new technique either. It is the oldest technique in the book.
Yeah, I was actually expecting astrology. That's why I laughed.
I'm getting in the woods. In the woods.
No, we respect the rock.
Or the
we respect the rock.
Weeds, that is.
I'm a rock.
All right, let me give you the argument, Jack. Let me give you the argument.
Yeah.
Okay. The NASDAQ has rallied significantly this year. It actually almost went to an all-time high before this most recent pullback. I think it was within like 5 or 6% of an all-time high.
Yeah.
Bitcoin, which has at times, yes, traded like a commodity, but it has also at times traded like beta to equities. Yeah, there you go. Bitcoin has been unable to basically leave its accumulation range, where the NASDAQ has very easily done just that. Where I think things could potentially be ultra bearish is if the NASDAQ pushes up again here and leaves Bitcoin behind like it has all year. Let's say the NASDAQ goes to an all-time high and Bitcoin basically gets capped at 30K once again. Then if we see the recession continue to be expedited, and we see the yield curve begin to uninvert and break that zero line, and we see initial claims start to move up and unemployment starts to move up, and we're actually going to get a technical textbook recession, and Bitcoin is still under 30K with equities about to roll over, I think it's possible that crypto doesn't trade like a commodity and actually trades like beta to equities, which at times it has. Not always, but at times it has. That would be the argument.
I do agree with this argument, but I think its timing is not for the current discussion, because I've always been pushing this argument as well. I just think that when the recession comes, we are trading much higher. But if we are not by then I totally agree, Max. But I'm saying basically, like, what is the current argument? If gold trades higher, silver trades higher, and let's say we have a slow grind up on equities above new all-time high, then and you can, I suppose you can argue that maybe like equities just go sideways here, and maybe silver and gold goes up in the meantime. But what's the narrative here for the bearish BTC? And forget that we have because I said that's totally possible, where we get a one last shakeout, just like on silver. And what's the argument for new lows?
Yeah, I don't have one. I don't have one right now besides a black swan. I don't have one.
I did want to state something against the yield curve, because historically, from what and if I'm wrong, you can always correct me, but from what I've seen across the board on charts, is at least on the yield curve's position, it's never uninverted without some kind of interest rate cuts.
Tommy, what were you going to say? You were about to say something, Tommy. I could sense you about to cook.
Yeah, I mean, I wasn't about to cook. I was just going to say, I think, it's kind of like what I've been saying. I think the biggest difference between the way that people are viewing Bitcoin is that some view it as about to enter a new bull cycle. And I think some people view it as the bull cycle that started in 2020 hasn't necessarily fully unwound yet and might still resolve lower. I'm not going to die on the hill that I think Bitcoin's going to make new lows, because I'm way more confident that you're going to see downside in ETH and altcoins more so than Bitcoin. But I think as far from a momentum standpoint and how long, not just that it takes to, just from 2017 to 2020, I think about how long we went sideways and how long that took to resolve that parabola. We are still resolving, in my opinion, a much more dramatic parabola of growth for the space from a market capitalization standpoint. And it's taking time to resolve that market cycle, right? I mean, I don't know that this is accumulation. If it's redistribution, it could be either one. But I think the biggest thing for me is that I could see the market cycle unwinding a little bit further when I look at, just for example, past bubbles, on tech and the way that they've resolved. Bitcoin could technically still go lower from that standpoint. So I don't rule it out, but I would also say, like I said, I'm much more confident on downside and beta to Bitcoin than actual Bitcoin itself.
Yeah, and to what you were saying there too. Oh, go ahead. Sorry.
I still have a problem with this being a distribution, because distributions doesn't happen after such a long time with the markets being depressed. and
Yeah.
there's no new money coming in, and at minus 75%, just that's not where distribution happens. Distribution happens after a bigger upside. So
Retail is pretty much washed at this point.
We are still like 10x above last cycle's lows. So it could be, one of the things that I've kind of argued with Bitcoin, and this is where definitely some people kind of diverge with me, is I think the parabolic growth cycle for Bitcoin is likely done at this point. And that's normal as it's going to, move into the commodity asset class. But I don't think that it's going to produce speculative tech outsized returns in the same way if it's going to be trading like a commodity.
I mean, with that, I agree that it doesn't going to, I'm not a fan of the halving and, like just because it's halving, we're going to go up. I mean, it could line up, but I don't think it's going to be because of the halving itself. As I was saying about 3 years ago or something, I believe BTC is going to be driven by demand. And I think the demand is going to come there. And I still think we can go to a larger price appreciation. But I don't think the next cycles will be like all the same. Like you want each time going to have a, something like this, then this, then this, and just keep going like this. I don't see that happening too. I think it's going to be in the future, it's going to be more, and especially as BTC becomes what like truly accepted as digital commodity, and the market cap goes way higher, because we have to keep in mind that BTC's market cap is still not even 1 trillion right now. Okay, so until that happens, I think there is still room for that much bigger price adoption. But then I do agree totally that BTC will start trading as within the rest of the market, basically. And I think it's happening right now already. I just think that BTC will go in line with the commodities that are primed. I think the lineup here for BTC is just perfect.
I just wanted to hop in. I got to take off here in a second, but so I love how we can differ, because I do believe it is mechanically driven into the halving, and I can give examples of actual data, not just I hope or I've seen or any of that stuff, and that's basically the halving in itself. What does it do? Essentially, it halves the amount of rewards, right? What does that do to miners? It capitulates miners into a position where they have to, they either get washed out or they make out. How can they make out? They make out by price going up. It essentially is forcing the hand of miners to have to hold. And this is something I had a discussion with somebody with the other day, and basically stated, like, these mining companies at the moment have to kind of more or less dilute their stock side, because they're not making enough profit on the Bitcoin side to be able to sustain, basic day-to-day scenarios as far as like electricity, upkeep, staff, so on and so forth. So this washes out the mining side of the market, every single cycle. But at the same time, you need to have Bitcoin at a certain profitable margin for people to even want to mine it. And in that case, it creates upside momentum, or it's, at least we won't even call it momentum. We'll just call it pressure, right? Because it forces these miners that were selling for multiple profits at the bottom of the bear, well, not really the bottom, but more the upside at the bottom of the bear, and to where they basically essentially after the halving can't sell anything unless they want to sell at massive losses, right? And so because they can't sell anything, that relieves a lot of the selling pressure side, because the selling pressure side comes from what? With altcoins, it comes from both the company that's running the altcoin, so they got to have sustainability, and if you're a POW, it comes from the miner side. On Bitcoin, it just comes from the miner side primarily, right? You do have some retail and stuff like that in Bitcoin, but it's primarily the miner side that is creating that selling pressure on Bitcoin. And once you relieve that miner side selling on Bitcoin, essentially you allow more room for price to grow in a more natural way, and allow basically passive flows to overtake selling pressure and push prices higher. And that's I just wanted to come in with that because I maybe the audience itself doesn't quite know how or why, and they're like, well, I'm just gonna just disprove it because it's just the normie thing to say. It's not a normie thing. It's literally a mathematical factor, right? Either companies get washed out and price can be sustainable at lower prices, or pressure gets pushed on the miners and they can't sell, and then selling pressure is pretty much relieved on the coin pushing price up. It's one of the two scenarios, right? If Bitcoin were to go deeper, I'd expect mining companies to go under. I'll basically state that.
Yeah, I mean, I do agree with it, though, that the miners have some profitability, and I understand obviously the whole halving thing. But the thing is that just like with gold and other commodities, you can for some time trade below that mining revenue price, and you can shake some miners out as well, and you can also trade way above that price for longer period of time. And obviously, if the hash rate drops, then the profitability level also drops. So I think I mean I do agree, and I'm not like saying that halvings don't matter. I just don't think it's gonna be like each 4 years we're gonna bump just because of halving, right?
Oh, I think your compound gets worse and worse as time goes on, right? Like I'm not stating that. I'm not saying we're gonna go like double the previous market, double the previous market, double. What I'm more stating is like you will get some kind of upward pressure around the halving due to the halving itself. And yeah, you could definitely trade below, and we did trade below the range for a while. 15K was well below the range.
True.
Look
I
at
don't,
average price.
and Will, I don't think the halving. I don't think we pump on the halving because there's any increase in demand. It's
no, it's a
literally-
decrease of selling.
Yeah, exactly.
Yeah, that's what I'm stating.
The opposite. Yeah.
Yeah. So if your passive flows remain the same across the board, just your regular institutions or big money that's just been passively buying in, and your selling pressure relieves and lowers, then it allows price to rise, right? Otherwise, you stay trapped in your price range, and that's what we've seen. We've seen Bitcoin trapped in this price range prior to the halving, and it's more or less because selling pressure can sustain here on this side of the halving.
You
right?
need demand this time. You need more demand as every cycle goes on, right? Because
you don't need to exceed demand. Because you
the supply gets cut in half,
selling.
but each time it's cut in half, that has less and less and less of an effect on price. That's why you see diminishing returns. You need fresh demand.
Yeah, I do agree with Tucker as well. You need larger demand, but I do think it comes because once again,
It comes
BTC is
higher.
trading. I believe the demand this cycle is going to be higher than it was in 2020-21, actually, because back then the rally was driven simply because of the world government's printing. I believe this time around, BTC is accepted and by large institutions, large firms, and we will see sort of some way that these institutions are able to buy BTC officially. We will see pension funds adopting it and so on. And I wouldn't even put it out of the picture that we see governments in the future buying BTC. Governments as well, but central banks, I meant, sorry. So I
Actually,
think that
central banks in the U.S. are actually approved for like I think 2 or 3%. I
Wow.
looked it up. A lot of people don't even
That's
know
cool.
that.
Yeah, that's pretty cool. I definitely can see the case happening that in the future. But where does I agree with Tucker that this cycle must be demand driven mainly. It can also be money printing, of course, but I think it will be also confluent with the demand, and the demand is going to come exactly from all these pension funds, from all these firms, and so on. And we still have to keep in mind that BTC is trading at 0.5 trillion. Gold is trading at fucking 11 or something T. And if gold goes,
see well,
okay, see well, if gold goes, 1x, 2x, 3x, then imagine the market capitalization of gold by then, and compare that with BTC, and just once again, it's hard to see the bearish thesis here. And by the way, I've read from Zodiac that that liquidity is leaving the market. With that, I agree. But like, hasn't it been leaving each bear cycle? Each bear cycle we've seen liquidity escaping the market, and then it suddenly comes back in. Surprise, surprise.
Whoa, are we moving right now?
Let's check those lower time frames, boys. Let's check them.
Big Tuck loves his 3-minute time frame. Man.
Yeah.
Yeah.
3 seconds.
ETH really needs to bounce like right now, or else I don't think it's gonna bounce, man.
Yeah, Jackus, what do you do if we lose that on ETH?
I mean, I talked about it, man.
It's over.
That it's over. No, but it's really this mainly this horizontal that we gotta hold. I said that ETH keeps looking weaker than the rest, and we definitely have this one. But the problem with trend lines is that they are sort of subjective in a way, and you wanna mainly use them. I believe in the higher time frame trends they are useful, but the thing is that you can have a wick through them pretty deep, and it's mainly the horizontals that you want to pay attention to, and this is still a clear demand, and we can still sweep these two lows. Oh, sorry, my chart is not on, so I'm not sure you guys seen it.
Yeah, there you go.
Yeah, but like we can still sweep these lows and be okay. It's not that I want to see it, but like once again, you can move with this trend line a little, and still, it will fit the hard time frame picture. Because it's always like that. Like if you're gonna look back, you don't precisely look at if that trend line, if you zoomed in, if it was like this or like this, right? So I think like if we in the future look back, we won't care about that. So mainly it's this horizontal. But yes, I was also saying that ETH cannot be losing this one, because if it is, then I said, hey, ETH will probably go below this range lows, and we discussed that quite often, and I was always open to that. But I was saying, hey, let's not be bearish at support, right?
Yeah, I don't look. It depends which exchange you're charting Ethereum on, right? Like the wicks are all different. So
yeah,
the
I'm
index
using
is
the
probably
index
best.
spread.
Yeah, but I think that diagonal is okay. But I mean, I
I've
agree.
got it. I've got it way closer, man. We're touching it on mine. I'm on Binance, but
I mean, Binance pretty good to use, or Coinbase, because they are still the largest exchanges.
there it is. That's it. That's the one. Yeah.
Yeah.
I mean, we could definitely bounce from here for sure, and you do have to lose that area right there underneath it. But
I mean, it certainly looks bad. I think equities have recovered nicely so far.
Yeah,
exactly. And why are we not talking about the fact that we talked
What's
about
the 3-second RSI doing, Tucker?
In 1987?
Yes, 1987.
It's bearish, man.
Oof.
People keep laughing at the daily RSI on assets, and it's still very useful. But obviously, context is always needed, right? So you don't want to just buy if just RSI is overbought or oversold, because you don't want to buy it when it's breaking out of range. Sorry, selling. But like here we had a impulsive move, and through this whole year, and then we got this retrace that we talked about, and that usually causes some decent bounce back, and we are seeing that, and we've seen that on BTC. People laughed at at BTC being oversold here, it did produce some fucking annoying range, then bearish divergence, and look at it bounce. People were looking for that squeeze lower, and yeah, maybe it still comes. It's still possible. I think if we start losing this level, I think that scenario becomes much more possible if we start losing this range. But like, I wouldn't be fading daily RSIs.
Here's what's been happening for this entire little range that we've been stuck in, or basically since we set the low last month on Bitcoin, like at right there, is every day you wake up and it looks terrible, it still
Yeah.
continues to hold support and then just recovers and slowly grinds up. So like every terrible drop we've had, we held support, we move up. Terrible drop, held support, move up. Terrible drop, held support, move up. It's just every critical low is being protected on Bitcoin. I'm not talking about altcoins. Again, I don't care about altcoins at this point. I will start caring about altcoins probably early next year. But Bitcoin has continually proven that it's trying to hold support, and it's on a mission right now. And I think something to at least be a little bit defensive of is if you are shorting altcoins and Bitcoin decides it finally wants to break above 29K,
Yeah.
just be careful, because alts will squeeze 6 or 7%, and then they'll continue to bleed back into Bitcoin. It'll just be a very temporary squeeze. But if you're just scalping around the altcoin bleed, that's a whole different thing. Like I know that we had some guys playing Sol in our Discord over the weekend. It's different. Sol, I mean, I don't think it's going to single digits again. Wink, wink. But I do think that there's definitely opportunity to short Sol, especially when the Sol BTC pair is outperforming. There's no reason that it should outperform Bitcoin at this point in the market cycle. It should be a Bitcoin dominated move, in my opinion.
And let's not also forget, Max, to what you were saying, is that with each drop, the bears just keep coming back, being euphoric how this time we are finally dropping lower. And as you point out, the market just keeps holding the supports and going higher. And that's why we pay attention to the chart, right? Because it keeps flipping these supports and big strong. And as I say, it's not time to get euphoric about the upside until BTC USD breaks above 30K, surely, or until like BNB reclaims that 220 level. But it's also not time to get euphoric about these drops. And I've said many times, BNB is a real threat and ETH is not looking good. But we need to keep in mind that ETH is still at support. It hasn't lost any higher time frame structure, and that can be very, it can be done on purpose. We know how that works, and we need to keep in mind that for these BTC to going lower would mean losing this range reclaim. So I still see so many lines up for continuation higher.
It really, and this is not that actionable, right? But it just really looks like it wants higher. The past couple weeks, it just refuses to break critical support. Again, not altcoins, not Ethereum, just Bitcoin.
Yeah.
All right, just Bitcoin.
Exactly. Yeah, I also don't think that like these trend lines. So like, look at this, right? So the BTC Japanese yen already broke out of, this already reclaimed the horizontal, and it also reclaimed the downtrend, right? It broken it. Why is that? Well, obviously because the Japanese yen has been weak, but we do anticipate that USD Japanese yen is now at 150, which is going to be defended, and we expect weakness from the Japanese yen. Strength. So out of these three major pairs, Japanese yen is the weakest. Then we look at BTC Euro, and we see that euro is just about to break that trend. It has already reclaimed this. Okay, so let's start on the weekly. It reclaimed this higher time frame range, double tested it, bounced out of it. Strong demand here, strong demand. Then on the daily, it broken above this level, and it's still being held down currently. But a lot of time, do you like are you betting that this happens here? Maybe there is still possibility for that quick sweep, quick nuke that people are praying for. But like this trend line is gonna get broken sooner or later, and I think BTC USD is obviously or let's put it this way: the dollar is the strongest, but that's the reason why BTC USD trades the lowest out of these pairs. But there's strengths as well. We've broken this downtrend, trading above both horizontals and these broken downtrends. And look at the dollar index.
Yeah, DXY looks like it's going to break that trend line eventually.
Yeah.
What's USD JPY doing today? Is it holding that 150 level?
Yeah. It's holding. It's not yet breaking. Like doing some significant break, but this move is obviously that's a large sell-off, large inefficient move down, and you want to pay attention to the impulsive moves. Mm-hmm. So not yet something groundbreaking, but what's awesome is that it comes at that level that we talked about for so long, and it's nicely lining up with the dollar index. I still think there's the possibility that the DXY takes out this high, the Friday news event. I'm not saying it has to happen, but I can see it happening. Take out some late shorts, maybe take these two highs and then sell off. But at some point, I can see definitely losing this trend. But let's actually see, Euro USD. Yeah, sort of trend as well. You could potentially entertain this one.
Boy, BNB looks just terrible. But it is technically I will say that, I'm impressed that Bitcoin hasn't pulled back more with BNB at 205. That's pretty incredible.
Yeah, BNB, again, I kept saying this, BNB is a thing to watch. By the way, this is pretty strong because we've seen that BTC used to sell with BNB each time, but now BNB is selling and BTC is not anymore. I think, at least for now, and that's definitely good to watch too.
So if BNB bounces, then you have to assume that maybe Bitcoin would bounce hard with it.
Probably, but if BNB breaks lower, then that's definitely we could see BTC reverting and going lower.
Yeah. BNB looks terrible. Yeah, but it's looked terrible for like over a month now. So
yeah. Let's see what we get. Again, until it happens,
You're on mute, Tucker.
You want to know it's not terrible, Max?
What?
Hagrid's Super Sniper, free
Hagrid's
to Discord members. Look at that, man. Come on now.
Is that the 15-minute destroyer?
Yeah, it is, but it's on the 6 hour.
Nice.
Bangers. We'll go back, Jackus. Just wanted to plug it.
Yeah. No, I'm seriously looking like except BNB for valid bearish arguments that I can consider for BTC. Except BNB price, and all I keep hearing people is just like, no, we're gonna nuke, equities are going to zero, and so on, and it seems more like emotional screams to me, and not legit,
Equities they recovered nicely so far from this little drop. Like
Yeah.
S&P 500 is almost green on the day now. It doesn't look bad at all. Save your charts.
I was just looking for the ticker.
Like that looks strong to me. That looks like textbook. We came back and retested the previous breakout level. Right there. Yeah. Look at that.
Yeah,
That's perfect.
I mean, we talked about this on Friday, that it probably does fill some of this, and I wouldn't even mind it going lower right now here. Like, I wouldn't mind if we just fill this inefficient movement down. We may take some stops here, and then we see lower. We make bears euphoric again. We fill this inefficiency. And continue higher because,
Yeah, I don't think we're going back down, honestly. I mean, it's a Monday. Okay, it's a Monday. I take that back. Mondays are usually a bunch of bullshit, but I think the low of the week could potentially have been set on that pre-market drop for equities.
I mean, potentially, sure, because
the wick to the downside has been set. We filled in the inefficiency. We filled in a majority of that inefficiency below us. We set a wick, a low of the week. I think it moves up. I think we probably see 43.60 this week, 43.70. And I think Bitcoin will be back above 28K very soon.
Easily. And what's also good to point out is that on this, and I've just noticed, on this entire move up since the bottom of October 2022, we do not have a single inefficiency to be filled. Okay? We filled all of them just on this move.
Yeah.
And that's, in my opinion, a strong argument. And we have not yet taken this high, by the way, too, which doesn't have to happen, but...
And we haven't taken the all-time high yet.
Oh, that's true.
One level at a time. I think things actually look very good here. I mean, BNB and altcoins aside, macro assets, including Bitcoin, look very good here. S&P 500, NASDAQ, Bitcoin, I don't think that they look bad. It's a Monday, so we'll see how things shape up. But you mean usually a Sunday night, Monday morning dump or a pump are for fading. So I think a lot of people probably woke up this morning on the war news breaking out in the Middle East and said, oh my God, I have to sell everything and I'm going to short. And then they shorted the low first thing at New York session open, and they're going to get blown to smithereens. So
indeed. Was it today that the news broke out?
No, it was this weekend, which is why we dumped futures this morning, because everybody woke up and as soon as the market opened, they started selling. Because it happened this weekend when the market was closed.
Wait, Jackus, where were you over the weekend?
Pilsner Fest.
I'm like, if you didn't hear about what's going on in Israel, you had to
be at a beer festival, man.
I legit didn't even open my phone that frequently. Like, I definitely did not open any charts or any news. I just did few photos. I usually let others make the photos, and I was just enjoying the night, music, friends, and like nobody cared about that stuff there. So.
No, can't blame you. Can't blame you.
I'm envious, man. I need to be able to just turn it all off.
Yeah, it's definitely helpful here and there. I mean,
S&P 500 is green now.
yeah, true.
Yeah, I think it looks solid here, but
Oh, it just took
yeah,
it just took that high.
Yeah,
Okay, let's see the reaction here.
go to the
Because
1 second chart, Jackus.
I don't
I'm
think
just kidding.
I have
You don't
1
have to do that.
second.
Oh, Jackus pays for premium, guys. We know he can get the 1 second chart. That's how we know.
Look, like if you have a bearish case, this is where it should come, and it should come like, I mean, it can still touch this one.
Look at
maybe.
Ken Griffin just taking it up, Tucker. Look at Ken.
Yeah, man. He's
Look at Ken
look
go.
at him. He doesn't even care.
Ken doesn't give a damn, man. Ken's just hammering the 0 days, man. Look at him.
Mhm.
Look at him go. A master class.
Ken Griffin, you know what doesn't care about Ken Griffin right now is altcoins.
That's true. Can you imagine if Ken Griffin, if Citadel started market making for altcoins?
Be over.
When they start market making for altcoins.
Yeah, then the fun is over, man. Then it's over. It's done.
Then all you do is sell options, and that's all you can do.
Look at that reaction of that high.
Ken is a respector of the TA.
Jackus, can we take a look at Bitcoin?
Yeah, quickly. I just wanted to entertain this level and why it's good to place trades above these is because you either have FOMO shorts here that obviously, either have their invalidation way above, or they are either closing. And then if we start coming in, this is where people start shorting. So they start shorting any of these levels in the fill of the inefficiency. And then they place their stops right above the first high, which is right here. That's where the market makers love to go. And then there's another people that keep waiting. So if we actually, and these are, I would say, the most smartest ones, they say if we break this high, then I'm gonna be putting my order, and this can come, here and there, obviously, and they will be saying, hey, I'll place my trade at the fill of the inefficiency right above it. But sometimes what the market makers love to do is that they just take out the first high, and they don't let these shorts to get in, and they just sweep the liquidity right here, get filled, and then nuke the market from there. And then so the ideal trade is like this, in my opinion. Something like this, where you place your invalidation here. It's up to you, but like this trade would make lots of sense to me. And there are also maybe some people waiting for the fill above, but I think if we go there, then we go higher.
So should we buy some 0 days or what?
Sorry?
We should become the 0 day put boys right now, huh?
Maybe like 2 days, 2 DT.
Mm-hmm.
Yeah.
Give it a little time to play out.
1 DT. I like 1 DT.
Okay, 1 DT. That's fine.
Yeah.
Jackus, you're sending price down. What are you doing?
I'm just playing with bears' emotion. I'm giving them hope. BTC. Yeah, it's holding. I would say this is the most respected level.
So much respect.
Yeah, we're furling this, but like even this can happen, right? So I mean, sometimes it's very clean, especially if there are inefficiencies in the market, but like sometimes it's just chop and you shouldn't care.
What do you think about those equal lows right there, Jackus? Right below where price is? Yeah, those. Yeah. You think those matter?
No, because, for example, look at this, right? This was the range. I'm gonna give you context. We had a clear bear trend, and then we basically had these two lows. We can call them sort of equal lows, right? And these equal lows were right below these equal lows, and then above these equal lows we had these equal lows, and it's just like it's surely good to target these, and they do matter, but it's not everything. As always, we need to create a context in the market and another equal lows above.
Yeah. Wow, we've been going for an hour and 40 minutes, guys. I think we need to call it here. I didn't even realize how long we've been going for.
I wanna hear from Tucker and Tommy still. Some
About
alpha.
what?
I know, some alpha, some new data points.
I'll give you
Something we
some.
can use.
I'll give the audience some alpha, man.
Go for it. Give him the chart, Max. Yes.
Here you go. I mean, here was
Oh yeah.
the entries given in the BB Discord, man. I mean,
that's alpha.
I mean, this is what you're talking about right here. Also, I'll just say this. I was looking at some of the Super Sniper stuff, obviously. And where is it? I think it was this one. Yeah. So check this. We're going to be generous. We're going to take it from the top of the candle in case you executed poorly. There's your 37% move. And we're going to take this from the bottom in case you executed poorly. Oh, okay. I'm chasing price. Look at that, huh? 7%.
We're moving lower, aren't we, on alts?
Free to BB Discord members. Coded by the shadowy supercoder. Yours truly. So I don't know, man. It is what it is. There's the alpha.
Look at that reaction on SPX.
Wait, let's look at ETH. Ooh, see ya.
It's over.
It's over. That's your big trend, man. Oh no. What's oh yeah, Jack has hit that one. Nice. Let's look at the yeah, look at that. Sweet. All right,
I'm using the Oenda chart.
Boy, 1570 on ETH. It's got to bounce here, guys. This is the spot for ETH.
It either bounces here or it's going like down all week, man.
Yeah, it's right here, man. ETH has to bounce right here.
Yeah.
Man, oh man.
You're gonna start chewing into this soon enough.
Matic is puking.
Can you go to a BNB, Tucker?
Yeah.
I want to draw a little range because this is the spot that BNB needs to hold as well. Like if you just drew a range from where we're at, maybe it takes out the previous lows. This is range low for BNB. Like,
what about BNB Bitcoin?
Probably looks horrible, man.
It does look horrible, man.
I haven't looked at the chart, but I've just been watching both.
Down only.
It looks terrible. Yeah. Oof.
Oh, look at that. This is an old drawing. Wow.
You know what's interesting? That the top on the BNB BTC chart came right on FTX.
Yep.
Yep.
Down only since FTX, breaking into the range. It's not looking good, bruv. It's not looking good.
Just get him out of the market, man, and I'll be max bull. Like that's really stopping me right now is CZ and Nance. If they're out, I'm going to be very bullish.
If CZ and Nance are out, man, there is no market left to be bullish in.
But, I mean, what would you call what we have right now? It's just like wash trading with Binance back and forth.
Yeah, but how much larger is Binance than all of its competitors?
Is Binance still solvent? And if they are, does it? Well, I'm asking this question because, FTX was not solvent, and therefore they only had so many assets to sell that were liquid. Is it the same case with Binance? I don't know.
Yeah.
Because that would lessen the market impact, right? If they've been selling off their assets over the course of this year to defend BNB. So if BNB actually goes, there might not be as much selling pressure as there would have been originally, but I'm not going to speculate as far as like what that looks like. I have no idea.
I mean, all we have left is speculation anyway, so let's do it. like nobody knows, right? What is it with
I think altcoins get destroyed if Binance faces serious sanctions, you probably see altcoins get obliterated.
Yeah.
But guys, bull flag.
Soul flag.
You know how many people were probably drawing that? You know how many people probably drew that like right here? Oh man, like right there.
So I was a little nervous in the short there, man. It was not going.
Dude, so was I. It was taking way too long, and I was paying funding, and then we just boom.
Sold Bitcoin is what gave it away, though.
Max conviction.
Yeah, sold Bitcoin doesn't look great.
Oof. Yeah.
I mean, there's clear liquidity below that H4. I mean, on a high time frame, Jesus, that looks so good. Sol BTC. But like on H4, there is still, I think they're going to go for that liquidity below.
Tucker, pop over to the 4-hour chart.
Is Sam's trial still going on this week? It should be, right?
Yeah, it is.
Are you guys entertaining that in US, the Sam trial?
I wish we could watch it.
Yeah, it's not televised, unfortunately.
I'm sure he's going to say something to negatively impact Solana.
I've had a lot of people ask me about it, and I'm like, I'm not really following it. But apparently there was a 60 Minutes on it too, or on Sam. People were asking me about that. I didn't catch it, but
Wait, this is all you need to know about the Sam trial. Where is it?
What?
Yeah. Oh, is it good or bad that he doesn't have access to social media?
It's definitely a good thing. Definitely a good thing.
No, it's bad. I want Sam tweeting. Bad. Can you imagine how funny that would be if we had Sam live tweeting?
No.
From prison.
Guys.
Yeah, ETH BTC is I said this morning I would give it to 0.055 because that's range low from that low that was set in June of 2021, Tugger.
Yeah.
Yeah, right there. That's the lowest you can go. I would allow for that. I wouldn't be happy about it, but I would allow for it.
Yeah.
But you lose that, it's completely over. 0.03.
Is it exactly 0.03? Wait, 0.05?
Oh, yeah, no, 0.055. I was saying if we lose that low, then it's 0.03.
Then it's 0.03
Oh, yeah,
time.
Yeah.
Yeah.
Ogre. Get out of my swamp, donkey. It's ogre.
Man.
I think 14.8 is a pretty big level for the NASDAQ, or 14.9. You can see the effort that they put in this morning at that level.
Yeah.
I think if you lose it, then you're probably talking about below last week's low on the NASDAQ.
14.8.
14.9.
14.9, yeah.
I mean, trading above last week's highs, right? Like consolidating above them. I think that's a pretty clear cut inflection point from a market structure standpoint.
Yeah.
But I don't know that a breakdown is necessarily imminent this week in equities. That wasn't my bias going into the week.
Yeah, this looks pretty decent actually.
Decent. Look at that level we talked about a minute earlier. Look at its reaction on M1.
Yeah.
We're gonna go back. We're gonna go to Jackus's chart. He's got it up.
Do I? Oh yeah.
Yeah. Oh gosh.
Yeah, there it is.
Look at that, Jackus. Look
That's
at that.
sniper.
But now we're gonna
For
we're
M1.
gonna come take your stop, man. Now we're gonna take your stop.
I could
Yeah.
I would
totally
just-
see that being the top low.
I do this though, because if it goes above, it's ogre.
It's ogre.
But I love to entertain that explanation where it didn't go to here, because that's where shorts were placed from the retail, and this is where stops of retail were placed, right? So
Mhm.
the early shorters had their stops right here. Those were touched. The market makers filled or put them off guard, and now the ratio between retail and market makers is favoring for a pullback. But I'm just trying to sound smart, you know.
Well, you're right. It happened. So what do you think? Now we take out some of those lows. Yeah.
No, I mean, I don't like whenever, like, this is also when I say it's really important how and when things happen, you know, because people want 100k BTC by end of the year. I think that's lunatic, and even if that happens, that's not good, because it would just create an inefficient move up. And for example, here, I just don't like the fact that there was such a strong shakeout. There was the impulsive move, but there was nothing in here. And usually when that happens, you get the bounce and use some bulls, stop out late bears. You then make euphoric bears with a break below. You make bulls believe that support was lost, and that's when you revert. And then you start, you know, seeing bulls saying new all-time highs. Then you get a minor pullback, you know, blah blah blah, and so forth.
Hmm.
They have to work the price around to shake people out always.
Legacy markets love your theta, man. That's the theme of the year. They will collect your theta.
Soilana should shut the chain down to avoid further damage. Oh,
I was actually fudding Solana so much in 2022.
I love fucking Solana, man.
Let me
Oh,
find
man.
this.
ETH is at 1560. Oh
Is it really? Oh
god.
my god.
Tommy, did you cover any of Sol?
No, I have
No.
not covered any of it, man. I haven't checked the exchange. I'm not going to until the move is finished.
There you go. That's probably what I should have done, but it is what it is. Oh, we got alerts popping off.
Someone,
Bitcoin
yeah.
should bounce here. I mean, I didn't expect Bitcoin to nuke early in the week, but maybe they do. If you break market structure, it's not a good look.
No, it's not.
We'll see.
This is the best Solana logo I have ever seen.
The on-off switch. Yeah, it's pretty good.
I was sharing that in 2022.
Solana to 0.1 ETH. What would that be? What, 150 bucks?
Wait,
That's rich.
did you just do 0.1
No, it's in the chat. It's in the chat.
Okay.
But technically, yes, that's what it
Is that Ansem in our stream, man?
is.
He's the biggest
Oh, man.
soul
Look at that
back.
thing. Look at
The
that
Soul
thing.
Bowl. Yeah, looking
Right here.
bullish, man.
It is.
Whoa.
And say trend lines don't matter, or trend lines are a retail thing. I mean, yeah, but at the same time, there is use for. Like, that's why I said earlier, do not laugh about if Tommy is trying to use astrology. I mean, what do we know? Maybe he finds some pattern there that can be useful. So.
Well, I've definitely found some patterns. It's been such a unique red pill. I was not expecting, to be honest, to find some of the things that I've already found. And I feel like when I sit down in the afternoon anymore for just kind of like mapping out my future plans, that is one of the things I'm kind of like unironically do every day. is I just like I try to dig a little bit further into that rabbit hole. I'm finding more and more stuff. It's pretty cool.
I think it works, man. I've seen enough of it to know that I don't know whether it's cosmic or if it's people just pretending that they're deities and trading based off of it. I don't know what causes it,
man.
The chicken or the egg, I don't know. But
it's cosmic. It's cosmic.
It's Matrix.
This might be a hot take, but I do believe that the monthly horoscope thing that you can get from Cosmo is probably a better piece of alpha than a lot of traders on CT.
Oh man.
Okay, so Solana, right? Either. Okay.
BNB's at 203.
I know. It's over for BNB, man.
Oh my god, it looks terrible. Is it nuking? No.
Yeah.
Got bought back up, but
they're trying to hold it, man. They're trying to hold it. It swept those lows. It swept those equal lows perfectly.
If you're gonna bounce, it's got to be near here if you're BNB. Otherwise, it's a market structure break.
Yeah. So I think that Sol either. I think it definitely takes this low. That's where people will be looking too long here, and is the stops right below. And I would love that, because this is where people are looking to buy Sol. So if it's bullish, I would love if it takes this one, front runs this sort of support. Maybe just touches this one, but like this, just like this week. And then goes for these highs. I love those. Look at those highs. Oh. Something like that. And if it goes slower, I think it could potentially even take this low.
You know where you should set an alert, Jackus?
No.
9.99.
No.
Good
No,
level.
Tommy, no.
Okay, so this inefficiency, look. I think you're safe, Max.
I know I'm safe.
10.08.
Oh, we're gonna fill the whole inefficiency.
Yeah, but still that's above 10, so.
And Tommy, we said we'd use Coinbase as our exchange, just in case.
We did say that. I forgot about that.
So
Oh shit.
perhaps Bybit Wix down below, on a big scam. But you're not going to see it on
Tommy will
Coinbase.
push the overshoot, man. He'll push the overshoot.
I will do it.
Tommy will lose thousands of dollars to win a small bet.
Well, I mean, I can't say that I'm mad at what Sol's doing right now. It's kind of making my my week. But I know we have been going for almost 2 hours, guys. We can probably start to wrap things up. and save some alpha for the rest of the week. I am very confident that we're going to get more volatility over the next week or so. So no shortage of things to talk about. Thank you guys so much for sticking around with us. Hope you guys enjoyed the stream. And like I said, we were going for 2 hours. So if you haven't thrown us a like or even a subscription, we would really appreciate if you would do that. It's very enjoyable for us to just be talking shop and, trading and executing while we're doing it. So we hope you guys enjoyed it. And if you really enjoyed the stream, remember what Max said at the beginning. I know that was a long time ago, but I'm going to shout it out again. We do have some premium links in the description of this YouTube video, as well as the link tree of our Twitter bio. Make sure to check those out if you want a little bit more of an intimate look at how we're trading the markets on a day-to-day basis. But like I said, guys, thank you so much for being here. We'll be back again tomorrow, of course, and y'all have a great rest of your Monday and a great rest of your week. Thanks again.
Thanks, guys.